Do you know have you ever heard of the business that we're going to do, the breakdown, FTX?
No, but I did ask my dad about it, and he said it was some like crypto stuff, and I don't like crypto stuff.
Look, I think that you'll enjoy today's class. Okay. I have like this feeling that taking into consideration everything that you've shared in this class about what you enjoy and what you don't enjoy, I think you'll enjoy the business breakdown for today. We're about to embark on a journey. Okay. So without further ado, let's start business breakdown. And let's start today's class. And okay, so are you seeing my screen?
Yeah, we can see your
Yes.
screen.
Perfect. Also, let me just open this so I can see you guys and see my notes. And where is the chat? So if anyone comes in the chat, where is the chat? Why don't I have the chat? Okay, Alec, that's totally fine. No need to worry about that. Okay, so yeah, today we're doing the business breakdown on Alameda Research and FTX, and I'm not gonna lie, it took me quite some time to make sure that we were able to do this today, but I'm really excited about this class. And so we're going to cover a bunch of definitions that will rely on previous knowledge from our previous class on assets, liabilities, all that stuff. And I also kind of I simplified parts of the story just to make sure that we're able to cover everything on the time that we have. And I know that I'll be doing most of the talking today instead of us having just the usual dialogue, but I do have some questions to ask, and I ask you to please interrupt me at any given moment with any questions that you may have about anything we're talking about. Okay. So here we go. Alameda Research and FTX. This is the business that we're going to break down today. And before we start our journey, there are a few concepts that you need to know. Okay. The first one is trading. Does anyone know what trading is?
Well, in
That
this,
what is?
Trading.
well, I guess like in this context, you would say for
Yeah.
cryptocurrency, it would be the exchange of cash for an alternative currency. And that could be other that could be considered Forex, cryptocurrencies, just any, situation in this case where you're trading, the US dollar or wherever you live, your normal currency for, a different type of currency.
I don't think it actually has to be a fiat or government or local based currency. I think you can trade two cryptocurrencies against each other, say, too.
Yes. So trading, yeah, go ahead. Sorry, Jay. I thought that you.
No, I was saying, but I basically agree with Braden.
Okay, so in the context of economy entrepreneurship, usually trading is the act of buying any financial instrument, any financial asset, in seeking a high profit in a short-term strategy. So I will buy something and sell it as quickly as possible in order to get high profit, which is different from investing, the philosophy is rather different, where you buy something and instead of selling it, you hold it in a long-term strategy in order to sell it at a higher profit. So trading is focused on small things, usually day trading, in smaller periods of time, and a short-term strategy to gain profit. And then long-term in investing is focused on long-term in holding those same assets. From just this definitions, do you want to try and guess what's the one that's more risky?
I don't know.
I
That's
think
okay.
it might be the short-term trading, but I think it's not clear to me that that's the case.
Out of which one is the more riskier, is what you're asking?
Yes.
I would
Between
say
trading and investing.
investing would be more risky because you do not know it's much harder to know what a few years will look like comparative to trading, which is short term. So like let's say a week from now. It's much different time spans.
Yeah, usually your reasoning makes a lot of sense. The thing is, what happens is since trading is happening so much faster, like the changes happen are first of all are way bigger and then are happening way faster. And so because the amount of risk is slightly higher at trading than investing, because you can look at a company, you can think of, okay, if I buy something right now based on the track record of this company, it will probably go up in like a year. So that's like a kind of safe bet. But I don't know if you remember, but not yesterday, the day before that, when we were looking at Spotify, and do you remember seeing a number just changing, like in near the price? You could see like the amount of things, like a number changing based on how slow it was getting, like how lower the value was, the price was getting. That's happening in real time. So when you're doing trading, usually you're looking at a graph and evaluating based on changes that happen in a minute, 10 minutes, or 15 minutes. And so it happens so fast that the probability of you actually losing money really fast and a lot of money is higher than investing. Okay. So yeah, but these are two definitions. We have trading, short term, buying and selling the assets, and that's it. And then you have investing, buying, holding that, and in the long term. Now, there are two more definitions that are important. The first one is exchanging currency. Okay, so currency is like what basically money, right? And actually not money, but the means for trade. So a few years ago, the currency was beans and chickens, right? I would give you like 2 chickens and you would give me like, I don't know, a cow or something like that. So we would trade based on that. That was currency, right? But then we invented money. And now in 2023, we have all of these different kinds of money. We have the dollar, the euro, the pound, all of these other smaller currencies. So we have all of these different kinds of money, right? And there's businesses that focus on making sure that you can exchange whatever kind of money that you have. So for instance, let's say that I'm in Europe, so I use euros, but for some reason I want to have some dollars to do something on a country that does not accept euros. I can just use an exchange business and trade that money and change euros to dollars. Okay, does this make sense so far? Easy, right? So you can just exchange whatever money you want with these companies. Now, another thing that's important, money, these currencies like euros, dollars, pounds, all of that, they have a specific value, right? A dollar right now is worth $1, but if it's compared with an euro, like euros are slightly above in terms of value compared with the dollar. So $1 and €1 they're not equal, right? Okay, and why is this important? Well, because we have markets around the relationship between currencies. Okay, so this is also important for our story. So that means that we can look at the market between the comparison between euros and dollars and see if it goes up or down. Okay, and we can just trade based on that. Okay, any questions so far? No? Come on, if you have questions, it's really important that you understand this. No, perfect. Okay, so finally, the last definition that we need is cryptocurrency. So a cryptocurrency is basically a digital currency, okay, secured by cryptography and based on a network of computers. Basically, you can think about this as digital money, whereas you can have euros and dollars based on coins and just paper, right? Cryptocurrency is based on digital assets, okay? Something that happens only in the digital world. Now, I know that this may be complicated for some, and I also know that I'm maybe oversimplifying for others, but for now, let's just take this definition, okay? It's digital money that's being protected or secured by cryptography. Any questions so far about these four notions? Nothing? So if I ask, for instance, what's the difference between trading and investing, what would you say?
The difference between trading and investing is the term or how long it takes to, I think the differentiate is just the time amount spent in it. The trading, as said, it happens so fast and you're always looking at the graph just to see, you know, what small changes are happening each second that, you know, we have to predict what might happen in like 5, 10, 15 minutes. Whilst for an investment, you can look at the reputation of the company and its potential profitability and see if think about the long-term investment into the company.
Yes, that's perfect. So we have the difference between investing and trading down. Okay, so what can you tell me about what are exchange businesses?
This is actually interestingly getting into my head about the truth of this. I think by exchange business, you mean a business where you try to make money by going from one currency to another and back, which sounds like trading, or is it the kind of business where you help other people do that?
It's just a business where you can exchange whatever currency you have to another, regardless of you making money out of it or not. Okay, so some companies in terms of exchange business allow you to just change from US dollars to other currency. Others allow you to do this and then try to profit with that change.
So
Go
the
ahead, JJ.
exchange business is a business offering this ability to their customers.
Yes,
That
exactly.
clarifies. Thank you.
Perfect. Now you're welcome. So Ella, welcome. I'll just review the 4 notions that you need to know before we start our business breakdown, because that's what we've been doing so far. Okay. So there's 4 things that you need to take in. By the way, today we're talking about Alameda research in FTX. Okay. And there are 4 things that you need to know before we start this. The first one is trading. So basically is the act of buying and selling a financial asset focused on a short-term high profitability. Okay, so I buy something today, or I buy something right now. In 15 minutes, I try to predict its price and I sell it and I win money with that. That's trading. Investing is I buy a stock or buy a part of a bond, or I buy something, a financial instrument, and I hold that as the price moves forward. And then just on the long term, I end up selling it. That's trading and investing. 2 more definitions. Exchanging currency businesses. These are businesses that offer the opportunity for their customers to exchange currencies, and then some of them allow you to win money with that. And finally, we have cryptocurrency, which is basically a digital currency that's secured by cryptography and based on digital assets, and it happens on a digital world. Okay, these are the 4 definitions, and now we can begin our journey. And we're going to start by presenting our main character, Sam Bankman-Fried. Okay, he is the founder of Alameda Research and the CEO of FTX, and he'll be our main character for today's story. Okay, by the way, if you do know how this ended up, if you know FTX and their story, please don't spoil what's about to happen for everyone else. So a few thoughts on Sam. He was born in 1992. He graduated at MIT in physics with a minor in mathematics. He started his career working in trading at Jane Street Capital, which is a trading firm. In 2017, he co-founded Alameda Research, his own trading firm. And then 2 years later, he founded FTX, a currency exchange firm. Now, right now you should be able to understand everything that's in there, because we've already talked about what trading is. And so a firm that does trading is a trading firm. And we already talked about what a currency exchange firm is. So you know what that happens. So this is just to present the main character for our story. And now we can begin with chapter number 1, Alameda Research. Okay. So Alameda Research was trading company. Okay, and once again, trading consists in finding these opportunities of like high profits in a short-term time frame. So trading firms, what happens is they find out what are some of the best companies that are about to blow up. They invest in them, they get a lot of money out of that stock, and then they sell it and they win that money. Now, the typical investor like us, maybe you have like, I don't know, $5,000 and you're investing on that, and that's like the money that you're having. And since like millions of people are investing at the same time, we're nothing but a drop in the ocean. And like me investing $5,000 in a given company, like it does not affect that company that much. Trading firms, like the big trading firms, that's a whole different game. Like they're considered sharks. If you know Shark Tank, the program where people go there and they pitch like their ideas, well, it's called Shark Tank because of that, because the people are in there are sharks. They are money makers, or they're what we call market makers, meaning they have, whereas we have $5,000 to invest in the market, they have 5,000 million, they have 5 billion if necessary to just invest on these different companies, and they're the ones making the money, the market going up and down. Now, they're not just the ones doing that, but they have a strong influence on the market, because if suddenly say I'm a trading firm and I'm investing $500 billion or $500 million in the company, what will happen to the price of that stock? Will go up or down? Up, of course, because I have that kind of like influence from capital. Not to be confined sharks with whales, and those are like those funds, gigantic funds that have basically investment in almost all markets, and whenever they want to either crash a market or make a market go up, they can just by allocating part of their resources into that. But I derail. Okay, so basically Alameda does this trading. We know what trading is. We need to buy something and sell it at a higher price and make money out of it. Now there's an important thing about trading, which is, whereas if you're talking about investment, whenever you buy a stock in a company, the only thing that matters for you is that if that company goes up, right? That's what matters. But in trading, you can actually bet, quote unquote, that the price is going down. And if that happens, you can win the money out in that way by the difference. Okay, so whereas in investing, the only way that we get money is to focus on the money, the lines going up and the value going up. In trading, we can both make money while it goes up or while it goes down. Okay, so specifically inside, so any question so far about trading?
I
They have
understand.
all perfect, Alec. Thank you. Okay, so speaking a little bit more about trading, there's a specific kind of trading called quantitative trading. And basically this happens when these companies create these very complex algorithms and models, okay, that predict what's going to happen with certain commodities, certain stocks, certain cryptocurrencies, certain like assets, and they automatically buy it and sell it, winning profit that way. Okay, so it still needs some human research, but eventually the idea is that the algorithm completely replaces the human trader. Okay, so Alameda, what they did was they used this kind of thing, these algorithms, to find out what Bitcoin, which is a specific currency, a cryptocurrency, being bought at a certain value in the US, and then they would sell that same Bitcoin in Japan for a higher value and profit out of that. Okay, so they created the algorithm that did this. Okay, this was like the main thing that they do. Basically, they programmed it, and as traders, they would focus on finding all of these different kinds of opportunities. But the main opportunity was they bought the currency at a given value in the US, and they would sell that same currency at a higher value in Japan. Okay, questions about Alameda so far?
I kind of question the legality of having an algorithm sort out and try to use Bitcoin to, invest into like a certain type of coin, then selling it either to make a profit in like Japan.
Yeah, all of this was done legally. Okay, this is actually what a lot of trading firms, quantitative trading firms do. Now, specifically, I'm talking about Bitcoin, but there's a lot of trading firms that do this with other commodities, with other assets. Okay, so that's not illegal. Now, I actually went to the trouble of finding the original pitch deck of Alameda Research. So this was the document that they presented to investors to talk about their trading company. Okay, so it starts like this. Alameda Research is a quantitative cryptocurrency trading firm. Okay, so right now you should be able to explain to me what a quantitative cryptocurrency trading firm is. What is it?
They're pretty much using a mixture of human research and then technology that they coded to trade cryptocurrency in large volumes.
That's it. Perfect. So they say in their paper, in their presentation, their pitch deck, that we are the best crypto trading firm in the US and among the most serious firms across the globe. Now, this is where things start to get interesting about Alameda. So they managed over $55 million. So that means like the capital that they have to do these trades, to buy and sell different things. Okay. And like these buying and selling of different things is what we call trading. Okay. And in a day, they would trade between 150 and $300 million, all right, of thousands of different products. Okay, so they have 55 million to manage, and they're spending they're spending their time managing that and having days where they get to $300 million. Okay. And so they claim that they've built the most sophisticated trading systems in the crypto world, and they outperform financial firms operating in traditional markets and long-only crypto funds. And up until now, they say we've maintained a low profile, but now we want to get some investments so we can grow. That's basically their pitch. Now, looking at this, is there anything weird that you notice?
Yeah, I mean, it's that, they only have $55 million, but they're trading up to $300 million a day.
Yeah, what's weird about that?
It's because they're over leveraging and they don't have the assets to back it up if the trades don't work out.
Yeah. So what happens is there's a big discrepancy between the kind of money that they manage and the kind of returns that they, or the amount of money that's actually going through the firm, right? If these numbers are real, it's almost like saying that you have like $5 to work with to buy and sell things, and every day you're selling things at the value of like $300. Like it doesn't make any sense, right? Because if that was true, your working capital, the money that you would have, would like it should have been higher, right? You should have been able to retain more money in order to make even higher trades. And so that's kind of sketchy. But then we move on, and this is where things get even more interesting, is that they say that they basically outperformed a bunch of different things. So you can look at here, and these are all different markets that you can invest in, okay? And their numbers is, okay, so in 2018 and 2019, if you had like invested in Alameda, you would get a return of 110%. Whereas all of the other things that they're seeing here, like all of these different markets where you could put your money on, all of them are negative. Okay, so this means that Alameda Research was presenting a product that would just give you extremely high returns compared with any other thing. Like they were like clearly ahead of everyone else. I mean, look at this. Look at this, like more than 3 times what this market would have, which is Ethereum, which is a cryptocurrency. It doesn't matter right now. Okay, what matters is the difference between these values. Like they had to be like the next big thing. The amount of money here is just crazy. The amount of leverage here was crazy. And so, but here's what's so weird about this is that in the last part of their pitch deck, they actually add this part where they said that they hadn't had a losing week in 6 months. So what this means is they had been just trading money, investing on all of these different things, all of these different coins and currencies and crypto stuff and all. They had all this portfolio of investments. And in the previous 6 months, half a year, there wasn't a single week where they lost money. Now, just to give you some context, like the big companies, like the bigger companies that you can think of, sometimes they lose money. Okay, and their risk is way lower than, say, trying to trade things because you don't have control over them, right? You're just betting on what the market is going to do instead of directly influencing the results as if you were the business owner. So to say that in the last 6 months they had 0 losses was crazy. And yet people bought it and they invested on it. And so Alameda in 2019 had 30 million of surplus and decided that it was time to create a new venture. This ends chapter 1. Questions about Alameda research? Nothing. Yeah, go ahead, Ali.
I think I understand most of it. I think it's really cool what they were doing with the crypto, and I feel like it's absurd how much money they can have. But
Thank you.
Yeah.
Thank you for sharing. Can anyone just give me a brief summary of that, what they understood about Alameda? Like what they are, what they do?
They take people's money and use it, I'm presuming, with leverage because of the amount that they were trading was so much higher than the amount that they were invested that they had under management, to make these trades to either buy something because they thought it would go up, or I forget the exact terminology, but buy the, I don't know, do the thing where you bet that it's going down. And then according to their claims, they did this very successfully and made money on average every week for 6 months in a row, at one point at least.
Yes, thank you, JJ. That's a great summary. So again, in 2019, after a few successful trades, they had 30 million and they decided to start something new. And that was FTX. Now, keep in mind that trading firms, in this case, they're not investing money from the common people. These are just investment money or money that they're making out of their own trades, okay? And they decided to change that with FTX. So FTX, what it did was allowed you to trade different currencies. So you could pay, like take $100, sign up for this app, you would send the $100 and you transform those $100 into different currencies, expecting its value to go up. And once it did, you could just exchange that into whatever currency you wanted. So let's say that I have $100, I would buy, this is not how it works, but let's say that I would buy 1 Bitcoin and Bitcoin would go up until the value being 120. And I would take out my dollars and I basically exchanged this money and had a profit. Okay, so this is what FTX did. Basically, you could just put your money in there, invest on different currencies, earn money with that, and that was it. Okay, any question about this process? No, it's easy, right? You have money, you put money there, you change it to something else, to another
it's easy to
currency.
understand.
The value goes up, you change it back, and you have profit. That was what they're doing. Okay, so using capital from Alameda Research, FTX started to grow to a point where they started to acquire other businesses, okay? Not only that, but then they even got investment for VCs and investment funds. So these are some of the names that got bought by FTX. So what, in this case, what does this mean? Like buying a company? Well, do you remember talking about market share? Does anyone remember what market share is?
I believe I do.
Go ahead, JJ.
I believe market share is of all the people, or possibly dollars or whatever, are going to be engaging in a given sort of industry. How much of that, how many of them, what amount of them are going to be doing that through your business as opposed to through other businesses?
Yes. Yeah. So I don't know if you remember this, but we watched Spotify and realized, well, in streaming music, 30% of people that use apps to stream music would use Spotify. Okay, so Spotify's market share is 30%. Now, FTX strategy to grow was very interesting because they had money. What they do was all of these companies had a smaller market share, right? But they were losing money, and so what they did was they bought these companies, winning that market share because they had the money coming, like their funding money, right? And so they bought that and grew their market share by buying all of these different companies. Okay, and so because of that, they, between 2020 and 2021, they outgrew everyone in this space. Okay, because there's more companies doing this, and as you can see here, like FTX is like having a sexy 75 times growth compared with like BitMEX with 1.8. So you can see in the graph, you can follow this green line and see that, like starting here, like a lot of the companies just go down, but they just keep going up and up and up, only compared with Binance, and even being able to just being a little bit higher than all of these other companies. So that means that they started to get a lot of people to just go there, invest their money, and trade based on their platform. Okay, so far, sorry, any question? Okay, so they were growing fast, like really fast, and to a point where in July of 2021, they were able to get investment in the order of $900 million, evaluating the company at $18 billion. Okay, so that's a lot of money, especially if you take into account they were a 2-year company. They were founded in 2019 with $0, quote unquote. Then they started off, they had some money, the Sam and the team had some money coming from Alameda. They used that money in their personal like funds to build this company, and it grew in 2 years to be a $18 billion company. So whenever they got this investment, they started to invest hard on publicity and marketing. So they sponsored the Formula One team by Mercedes. They bought the Miami Heat's arena and turned it into the FTX arena. They talked with a bunch of different influencers and celebrities to make sure that they were aligned with them, and they shared about FTX. Everyone is getting into crypto through FTX. That was their motto. Okay. So it came to a point where in 2022, they were actually the 4th biggest company in this space. Okay. So every year, $599 billion were traded in their platform. That means that all of that value was earned or lost doing trades by all of these customers. Now, you can see that for a company that only exists at this point by 4 years to be the 4th biggest company in their industry, that was gigantic. Okay, that was gigantic. And you can see that, of course, the first one is Binance with like this extreme difference, but like other than that, FTX was able to surpass all of these different companies. Okay, questions so far? Nothing? Okay, so I'll ask a question. Can anyone explain to me what specific thing does FTX do?
You can go on to the app and you can trade your currency for any cryptocurrency or vice versa, or trade a cryptocurrency for a different cryptocurrency.
Yes, and what's the point of doing that? What's the point of me turning dollars into a cryptocurrency?
To make a profit.
How so?
To make a profit if it goes up. So you can either, just go into get cryptocurrency, or you can margin trade the cryptocurrency, or short the cryptocurrency, which is like shorting is pretty much just betting that it's going to go down. So
Yeah.
there's like the main functions you can do.
Yeah, it's almost thinking about these currencies as markets, and I would switch my money to that currency. The value would fluctuate, preferably going up, and once that did, I could just turn my money back into the dollars and earn money with that. That's what they did, right? And they did it to a point where they were very good at it. Now, here's what starts to get even more interesting is that in July, as I was saying, like in July, they were evaluated at $12 billion. Okay, this was July of 2021. Now, in January of 2022, sorry, what, JJ?
12 or 18? Because you
18,
said
18,
12,
sorry,
looked at
sorry,
18.
sorry. My bad. They were evaluated at $18 billion, okay? And in January of 2022, they were evaluated at $32 billion. So that's an enormous growth in just a few months due to publicity, okay? Due to their marketing and very aggressive marketing, and keeping to buy all of these different smaller companies that own market share, okay? So with this, we came to an end on our chapter at FTX. Any questions about this?
I have a
Go,
question,
JJ.
which might not be the best to answer right now, but when a big company that does something buys other little companies that do something,
Mm-hmm.
is that really complicated for them? Like, they've got these little companies that do stuff differently, perhaps, than them, and they have to keep doing it that way and have people managing all that. And if you buy a company that was, say, losing money, they don't just magically stop losing money because you bought them necessarily. So I'd like to talk about that at some point, because it's really interesting to me.
Yeah, so we can dive into that in a little bit. So what happens is, first of all, your first question is a good question. What happens when you have a company that like produces mugs or water bottles in a given way, right? And suddenly you're buying another company that produces different kinds of water bottles, and how can you manage that? Well, first, that's actually a very hard part of like buying other companies, that it's not so much about the product but about the culture around the different products, okay? And that's why a lot of the times when you have these buyouts, you have a team which like their only like task is just precisely understanding who are the people that have some kind of culture fit, and how can we make sure that we're keeping those and letting go all of the others, which ties into the second question that you were saying, which is like, okay, so how they stop losing money? Well, a lot of times, a lot of people get laid off. That's one of the things that happens. But also then with a little bit more capital, maybe they focus on reframing the product in a different way to make sure that they're maybe more interesting and people are more willing to engage with the company. So I'll give you an example. In the businesses that they bought, you had one of them was called Blockfolio, okay? And if you see here, like Blockfolio, it says Blockfolio 2.0 because after FTX bought it, they had the capital to invest and like change a little bit of the design and the user experience and the user interface in a way that maybe could get more people to become part of the company. But usually what happens is, first you have a team that's made of that, then second you have a lot of filtering who's in it or who's not, and then by having a little bit more liquid assets, liquid money, you can actually take those and create a better product. Does that answer your question? It's actually way more complex than this, but as a basis, JJ, does it answer your question?
This answers important parts of my question. I think my curiosity on the subject remains active, but
Perfect.
basically, yes.
Perfect. And I think you should explore that curiosity for sure. Okay, so here's the other part of this. Okay, before we get into chapter 3 of our story, we need to understand, do a small interlude. Okay, and I promise you, we'll do this interlude and then we'll stop and take a break. So far, we have this one man called Sam. Sam was a trader, and he decided to create a trading company. The trading company went well, even though it had some weird numbers, like way too good numbers, but it went well. And so he created this other company, an app where you could just put your money and exchange currencies and win money that way. Okay. And that app in January of 2022 was evaluated at $32 billion, having grown like crazy in just 3-4 years. Now, in order for us to fully understand what's about to happen, we need to take a moment to talk about FTT. So here's what happens. When you create these companies, these trading companies, these currency trading companies, usually these companies create something called a token. Now, tokens are basically their own cryptocurrency. Like, think about, let's say, if the Socratic experience was a cryptocurrency, we would build like this thing called TSE, and TSE would be our own coin, like our own token. Now, this is not valid anywhere else except here at TSE. And it's the same thing with tokens in these crypto companies. Okay, they don't have any value outside of the company, but they work almost like a stock. So what happens is, because the company is starting, usually people are very interested in buying these tokens because the value is very low, right? So there's a high percentage of growing because a lot of customers are coming in, buying that same token, and the price is going up. Okay, so it's almost like, once again, a stock in their company, in the cryptocurrency company, the token is. Okay, and so FTT was FTX's own token, and is basically a key to understand the final chapter in our story. So FTT, just to put it simply, is basically the stock of FTX, the thing that people are buying in order to be a part of, quote unquote, FTX. Any question about this? Okay, so all of this was just to give you some context on what's about to happen.